Welcome back, and you're joining us on the show now is Ashish Pethe. He's owner at Waman Hari Pethe Jewellers. Ashish, hi, thank you so much for joining us. And it has been one big bull run that we've seen in bullion to begin with. 2280 almost done, and the June futures in COMEX are trading at $2,308 an ounce. So clearly 70,000 is just a matter of time right now. But I do want to understand on how is industry dealing with this very volatile and one-sided strength times.
Good afternoon. I must tell you the industry has been taken a little by surprise by the speed of this rally. Everyone was expecting gold to reach 69,000 in the domestic market. But the speed at which it has gone has surprised many. At the retail level also, the retail customer is a little surprised. He's taking the wait and watch road. But I think the consumers are now clear that the bull run of gold is here to stay. It's for the long term. So they are not, averse of this price rise. In a way, they are happy that the price is going up because everyone has some form or the other of gold in their households. So the retail customer is happy. Jewelers are, being cautious about stocking up for the future festivals that are coming, like Padwa or Akshaya Tritiya. And the large jewelers are now again focusing on the hedging part of the gold because it's an uncharted territory, all-time highs all across. So to manage the inventory is going to be tricky. So that's what's happening in all three sectors of the industry.
Oh, I get that. The way the gold has moved up, and as you said, going forward, there are a couple of things to watch out for. So whether it's about Akshaya Tritiya or even Gudi Padwa for that matter. Feb wasn't so great. March has been a complete washout. And the way April has begun with these all-time highs, yet again, as a jewelry industry, what kind of numbers are you working with in sense of prices now? How are you doing your calculations?
I think the industry has understood that 65 is the next, bottom that we can look at. Earlier, we were looking at 58 or 60,000 as the next bottom. But now the gold has taken out 65 so convincingly. And it has stayed above 69 for a couple of days. So I think 65, 66 is the next support that we can look at. At the retail level, I must tell you, I'm surprised at the consumers, outlook towards gold because they have slowly started coming back. The walk-ins are happening. And even at 69, at the retail level, the rates would be around 70,000. People are buying. And it is not a complete washout. Obviously, yes, we're looking at 20-30% drop. But yes, consumers are still coming. And once the prices stabilize, then they will come in and buy whatever they are looking at.
Ashish, you said 25 to 30% of total sales are happening, or 25 to 30% of a decline in sale is happening?
Drop in terms of volume, but the price rise is, buffering that a little. Yeah.
Ashish, also, what is the kind of sales that the street is now anticipating going forward for the month of April and May right now? Is it going to be about lightweight jewelry? Do you think more investment is coming in? And I also want to understand on what is the exchange here. Are people buying all fresh jewelry, or do you think the exchange composition has gone up?
As I've always said, that the exchange goes up when the prices go up. That is a given. People are looking at lightweight jewelry. In some markets, people, even retailers are, making 18-karat jewelry in their traditional designs. And people are testing those waters in lower caratage in traditional jewelry. But one interesting fact that we have seen that whenever there has been a spike from, say, 40,000 to 50,000 or 50 to 55, people have rushed in to sell their old gold. But last two rallies from 60 to 65, now 65 to 70, that rushing in to sell is not seen at the retail counters. People are not coming to sell because I think they have realized that the prices are going to head northwards. So no one is selling and they're sitting tight. That's a unique thing that I've seen in this rally particularly.
All right. And I'm sure that's good as well because, yes, people have made money because if you bought gold last year at same time, 56,000 was the price. Today is 70,000. So it has been a very clear-cut buying on that gold that people must have done last year. Ashish, as always, thank you so much for joining us and making sense of what really is happening with the gold rally and how various stakeholders are looking at it. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.